Will stocks get you where you want to go? How about bonds? A diversified portfolio and a retirement plan? Not even close. There are 4 assets that will make you rich. If you don't know about them, or if you don't invest in some of them or all of them, just plan on a slow, tedious disappointment with most retirement planning. It's going to be filled with failure and risk, but it doesn't have to be. If you master these 4 assets, then you'll have a game-changing impact on your wealth and finances. I've invested in a lot over the last 25 years. For me, it began at age 15 when it was a car wash. Then at 18 years old, mutual funds. Then I looked at some storage units and car washes that were automated that I could buy, and instead decided on oil and gas and a hard money lending fund, which is bridge financing. So before someone got their bank financing, I would finance it until they got the long-term financing. Then I even did some developing in real estate and even invested in commercial and residential properties. Look, none of this is what makes the difference. What makes the difference are these 4 assets. So what are the assets that make you rich? Is it tax liens? Is it the storage units? Is it car washes? Is it options tradings? Is it startup companies? Is it private placement memorandums, if you've heard of these? These are where you can have 100 or less investors. Certain of them have to be accredited at a certain level. Is it hard money lending, where you're doing that short-term financing? Is it private equity and getting involved with something maybe as a pre-IPO or even an IPO? Is it gold and silver or cryptocurrencies? There's so many investments out there, but let me break this down into 4 assets that make you rich. The first thing is businesses. Businesses are absolutely a huge piece of this. And I'm not talking about businesses that are public businesses. I'm talking about private businesses. I endorse the book Buy Then Build by Walker Dyville. In it, he highlights something called acquisition entrepreneurship. Acquisition entrepreneurs, as he says, start by buying an existing business instead of starting one from scratch. So many of the ones that are started from scratch that are kind of the Silicon Valley, tech ones, a lot of those make no money. They raise money, they burn through it, and they fail. Well, if we look at acquisition entrepreneurship, it stacks the odds in your favor. See, if you begin by buying a business and then take an entrepreneurial approach to building more value, this allows you to improve cash flow or get cash flow from day one. The combination of an existing small business's profitability and sustainable infrastructure with new innovation and drive by an entrepreneur is a magical recipe. So if you're an entrepreneur, this could be a great thing, because if you go out there in the stock market, how much are you paying for that? If we look at the profit of a major corporation that's in a mutual fund, for every dollar you have, it might cost 10 times more for that company than a private company. Meaning, you can get a private company for 2 or 3 times multiple, or you might be seeing a 30 times in the public market. So there's this awesome opportunity here. See, the main benefit of acquisition entrepreneurship is that existing companies are already established with customers, brand awareness, employees, and most importantly, revenue and profits. All the things that a startup doesn't actually have. So instead of having to go out there and raise money for months and maybe often years, while also trying to build sales from scratch with a new product, the acquisition entrepreneur acquires a profitable infrastructure from which to begin. Existing businesses provide established markets, so they first don't have to worry whether they're too early or whether another company with more funding will beat them to market share. And in some cases, they don't have to worry about creating a market from scratch, right? Simply by buying a company, typically one greater than 1 million in revenue, you can remove so much of the risk that's inherent to entrepreneurship. Tim Carden, who's been on many of the YouTube videos with me, his brother Ben Carden, they've both done this. They've both gone out there and bought existing businesses and seen extraordinary success. This is also much better than putting your money in the stock market, like I mentioned, without knowing what's happening in a boardroom there and who the employees are. And with so many of the S&P 500 giants, they just move really slowly. That really limits growth. But most importantly, most of those stocks provide no cash flow or very limited cash flow. It's all appreciation potential. See, that multiple, as I mentioned, on a small business can be so much less, a fraction of what a large publicly traded company is. So there's so much opportunity inside of small companies that operate on legacy-based systems that have never upgraded to lean business models, meaning they've got old systems with tons of waste, and with the new insight, maybe there's ways to plug the leaks, to eliminate that inefficiency, and you don't have to go develop something from scratch. And maybe it's even like my friend Mike Geary that just is really good with online marketing, and he could get a business and immediately make it profitable from day one with his existing businesses because it's complementary. So I can hear you. You might be saying, I can never do this because I'm not rich. First, let me say that in my experience, very few entrepreneurs raising capital to launch any startup is actually rich. So I'm not sure the comparison of all that's too valid. That said, although brokers typically want to see a few $100,000 in available cash, it's the nature of buying an existing business that makes it much easier to gain access to capital. See, banks offer loans to buyers for up to 90% of the purchase price using the assets of the business as collateral. So according to Walker, the financing in these deals is typically done in one fell swoop, with you bringing a down payment or some type of equity infusion and the bank providing the balance. In addition, raising money from a bank means that you get to own 100% of the company yourself. You're not giving up equity. You don't have to have partners. And see, owning a business that generates recurring revenue is key. Recurring revenue can create economic independence. Recurring revenue can provide cash flow now versus waiting for 30 years for a retirement plan. So some questions that Walker would have you ask is, can this operate without my daily involvement? Do you know the metrics that matter and how to manage them? Can you create consistent cash flow with that business? Is the business something you can sell? Or is it just another job? I mean, it might be a self-employment opportunity and maybe that's okay for you. But if you already have a business, can you acquire a business that you know how to monetize better than its current owners? Is there something complementary out there already? So look, starting a business, that's a lot of effort. And it might take a long time before you get to cash flow. But what if you can already take a cash flowing asset and merely improve upon it and find ways that there's less reliance on you because there was already infrastructure? This is less risky if it's something that relies on your skill versus a startup that requires funding to release a technology that requires a lot of infrastructure. So that's the first asset. Existing small private businesses that you can get for a lot better price than major corporations. Price for the profit. All right, the second one is real estate. Real estate is an asset that can be good for some and bad for others, just like buying a business. See, it all depends on you. Risk is in the investor, not the investment. So all these assets are a lot more active versus fully passive. A lot of people just want to hand their money over and hope that it works out. That passive type of investing has seen such a massive failure rate because people don't know whether it's working or not. People are just trusting and hoping, but they're not sure if it's really the right thing to do. You can make these investments more passive over time. Without your input or responsibility, it's rare to find something that works from day one with no involvement. Real estate is to be treated like a business. To increase your odds of winning and avoiding mistakes, I'm going to take you through some of the keys from the book, The 5-Day Weekend, that I co-authored. Obviously, this video isn't an exclusive treatise on real estate investing, but Nick Halleck has done a ton of it. I've done a ton of it. And so here's what we came up with in the book. My goal here is to give you enough of the foundation so you can move forward with confidence if real estate's your choice. You'll need to learn what works for you. But here's what you'll want to know. Number one, focus on cash flow. If you have cash flow from day one, you're going to lower your risk and you can have that profitability. Second, the profit is in the purchase. When real estate is done right, you make money not when you sell, but actually when you buy. Three, look for multi-unit properties. So it's one financing deal, but you're getting multiple properties. And then if there's one vacancy, you have other properties that are producing cash flow. Number four, get your financing in place before you buy. So meet with the bankers and the planners and understand the loans and maybe even get pre-approval. Number five, know your market and your numbers. So before you buy a rental property, know the market you're buying in. Collect solid data. This might mean that you pass a lot of things up, but know what your parameters are and be educated before you invest. Number six, don't get impatient and or emotional. You got to manage your excitement. That might be bringing other people to the team and having other people that might be, okay, I don't think this is the right time to move forward, even though you might have rose-colored glasses. So I want you to be carefully analyzing things and be logical. Number seven, buy in the right location. Location is an absolute key to profit. Study market trends, learn where the deals and demands are. Number eight, find properties where you can build sweat equity, right? So these are things like the older properties instead of new properties, where you can increase their value through upgrades that you put into them. Number nine, be smart about your renovations. What's worth the money and what's not worth the money. See, I want you to keep your budget expenses to 15% of purchase price. 15% of what you purchase it for could be the expenses that you can add. So find a pattern that works for you. Add value to rent out the properties faster, manage these properties wisely, screen the tenants, create systems for receiving the rent, have an emergency fund because things do break down, and make sure you have enough cash on hand to handle repairs. So I've given you a bit of a list here, but the key is I want you to hold on to your cash Because if you tie too much up in property, equity isn't always accessible. So be careful and don't over leverage. Put maybe, make sure you're buying at 15% below the normal market value. Put 20% down to build in a buffer should the market crash, and understand market volatility and exit strategies. Things change quickly, so be on top of the trends and be prepared for the worst. As you hear this, you might say, "Phew, that is a lot." Well, maybe real estate's not for you. But there's other people that geek out about it. They just love it and they're willing to do this all day long. Be careful what you invest in. The first thing is buying businesses. The second is real estate. And the third is intellectual property. This is that third asset. So much of what people spend their time enjoying is intellectual property. I mean, think about TV shows and movies, watching comedians, to the content here on YouTube. So where do you personally have expertise? Can you improve the industry that you're in? Can you educate people on a product or process that solves a problem or improves someone's life? So I can also get recurring revenue through books that I write or subscriptions to memberships. Like if you went and looked at wealthfactory.com/Garrett Club, this is one of those memberships. There's an investment every single month, but people get me every month where I'm doing a Zoom call, I'm answering questions, I'm tackling a topic, I'm giving some of the newest things that I'm creating, I'm giving them a lot more depth than I might be able to in a 10 or 20 minute YouTube video. We give them these golden tickets where they can redeem certain, things like a financial trend summit that we did, telling people how to navigate a tough economy, which we're facing right now. We've got things like if someone's launching a business, a program that we call Scale, or if someone wants to become economically independent, a program called Curriculum for Wealth. And so they can redeem these with these golden tickets, and there's a concierge that kind of helps them out. I just did 19 calls the other day with people in that program to really discover and figure out what challenges that they're facing so that we can add even more value. And then we actually print a report every quarter of things that they can implement. So if you want to see intellectual property, you can go to wealthfactory.com/Garrett Club and take a look at it. I actually created a playbook for those in that club to take an idea to market without requiring borrowing of funds or risking all their money. It's my win then play playbook. I actually got a big compliment from my wife the other day. She says, "This is really good." I'm like, yeah, maybe I know what I'm doing, right? In it, we've got the cycle of creation. And in that cycle of creation, it outlines the process to take an idea to a concept to a framework that you can now delegate to eventually a product, service, or experience in the marketplace, but profit up front. So the first one, buying a business. Second one is real estate. Third one is intellectual property. And the fourth one, it's people. People are the only real or true assets. So much of the game is won when the team is picked. One of the greatest teams you can ever have is a great tax and legal team. Why? Because most people are tipping the government. I mean, if you want to check something out, go to wealthfactory.com/tax. You can actually gather resources to support you in building that team. If you already have a large income, or you're working to get a large income, you're absolutely going to have a significant partner. That partner is called the government. Not always the most welcome partner. And so many people are paying more than they need simply because they don't have the right team. See, they're getting plenty. The government's taking property taxes and excise taxes like gas tax, there's sales taxes, just to name a few. When we look at the income tax, and there's so many ways that people can pay less in that, they just don't know because they don't have the right team. It can make a massive difference in your bottom line. For example, if you don't know about the Augusta rule, which is a way that you can write off your home 14 days a year, or if you don't know about D-pad credits, and it's something you go back and look at to find out if you've overpaid on intellectual property that you might have created, or if you don't know how to differentiate your income by choosing the right corporation and avoid self-employment tax, or if you've never heard about 199A, those are just a few things where I'm assured you're overpaying tax and now you're in the know. So that just reminds me of a quote from Pixar, right? So here's the deal. If you have a good idea and a mediocre team, they're going to screw it up. If you give a mediocre idea to a brilliant team, they're either going to fix it or throw it away and come up with something better. So Pixar works to hire the best people and then give them difficult challenges. You don't have to go it alone. Utilize the knowledge and expertise of others so you can go further. Will stocks get you where you want to go? How about bonds? How about the diversified portfolio and retirement account? Not even close. These are the 4 assets that will make you rich. And if you don't know about them or invest in some or all of them, plan on some slow, tedious disappointment with all of the retirement planning out there. It's just riddled with failure and risk. So utilize these 4 assets, apply what you've learned here, and they're going to make you rich in a very short period of time versus 30 years. So now you have the knowledge to transform your thoughts into profits and build the life you love. If you're looking for more on this topic, check out my video on what separates the rich from the poor. You'll learn how to stop wasting time on budgeting, and how to add value to your life and to others. I'll see you there.